The first half of the year is officially gone. The stock market has managed to successfully defend the first line of support last week and has actually managed to significantly bounce from that line of support. We have had Apple hitting a $3 trillion company last week and is actually trading at all-time highs. We have the first country to officially announce a recession, Germany, and we have the German DAX hovering around all-time highs. Yet the financial media is telling us that if we've missed the rally from the bottom, we should start buying now. Why? Because this rally has legs, as if the fundamentals doesn't even matter anymore. Guys, we are living in a bubble. We have had the S&P rallying significantly from the January lows, and we are now starting to see negative divergences occurring on the higher time frames in the stock market. There's a lot going on at the moment, guys, and in today's video we're going to go through both the fundamentals and the technical analysis to understand how we can better navigate this stock market. As always, guys, before we start, if you are new to the channel, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning. And guys, if you do enjoy today's video, please give it a like. It does help us a lot, guys. And if you do enjoy it, then do share it with anyone else that may also find this useful. Now, guys, let's start off with the S&P 500 here. And guys, we've introduced this chart to you before. Here we have the real chart of the S&P 500, and as you can see there, we have 11 unfilled gaps to the downside, guys, and this is quite significant. We've discussed this in previous weeks. We did have a pullback and filled a couple of gaps. However, last week we actually managed to create even more gaps, especially on Friday there. Now the technicals, guys, they look very, very strong. They look very strong, very bullish to the upside. So there's no question about that. Even though the fundamentals are telling us that a recession is definitely coming and we may have some sort of credit event happening very, very soon. The technicals, they look very, very strong, and we'll go through and discuss how we can actually trade this in the next section here. But before I start, guys, let's look at the calendar, the economic calendar for the week ahead. And guys, we have on Monday, very important, guys, we have a half day in the US, so the stock market will actually close at 5-6 p.m. UK time. On Tuesday, the 4th of July, guys, the US stock market is closed for the Independence Day, and then the market resumes from Wednesday. Now on Wednesday, guys, we have the Fed, the FOMC meeting minutes. Not market moving, I would assume, but something to pay attention to. And then we have, guys, on Friday, very importantly, we have the non-farm payrolls report. Now the non-farm payrolls report is actually forecasted to come in a lot lower than the previous months at 225k. So pay attention to this. If we get another high number, guys, that may put some pressure on stocks there, telling us that the recession may not be coming, but the Fed has to stay and raise interest rates for longer. So there's something to pay attention to. Now let's start off by looking at the technicals here, and start off by looking at the S&P 500. And guys, we've actually managed to make a new high here on the S&P 500, and we are now seeing negative divergences. Now when we get those on higher time frames, there's something to be aware of. Be very careful once we get those, guys. Now, where can the market go to next? As I've mentioned before, we've managed to hold the first level of support, guys, at the 20 EMA. This has managed to successfully, we have the market makers have managed to successfully hold this 20 EMA here, and we had a significant bounce here to make a new higher high here last week. Now this is very important, guys, because if the market was thinking about going bearish, then we will have this level here will have gave in, but because that didn't happen, there's more upside here in the short term for sure. Now where can the market go to next, guys? Very important here. We've got the liquidity area here on the daily sitting at around 4517. Okay, so something to pay attention to. And guys, I have a level here for you. I've got this level here at 4495, right where this line is. Monitor that, guys. That's a very important level. Okay, monitor that very importantly. 4495. Now let's look at how the market has actually opened up. So we did have quite a strong move on Friday, and we opened with a gap, guys, here. Okay, we closed down here and then we've opened right up there. So we've managed this rectangle here is actually the gap that we've opened with. As long as price can remain above this gap, so it's either going to go perhaps until the market opens, go fill this gap and then bounce back. As long as it's able to, the price is able to remain above this gap, guys, this is bullish for the S&P 500, and we can certainly go higher from there. If price is going to close below the gap, come back, retest this, act as resistance, we can certainly move in lower. So that's something to pay attention to, guys. As long as price can remain above this gap, the price is bullish to 4495, potentially 4517, where that daily liquidity is, guys. So make sure you pay attention to those levels. They are very important, guys. Make a note of the lower and the upper expected move as well for the week, guys. Very important as well. Apple, as mentioned before, guys, we are at all-time highs, and we've actually managed to last week, guys, get reached our take profit in our inverse head and shoulders. This move right here at this alert is now complete. So this has played out perfectly, guys. If you took advantage of this, well done to you. This has been a crazy move up higher, guys, but the inverse head and shoulders has played in perfectly there on the daily time frame of Apple. Now Apple, guys, have managed to open and leave a large gap behind on Friday. We've got some very important things happening here in Apple, both technical and fundamental. On the 26th, guys, 26th of July, we have earnings, and this is going to either make it or break it for Apple. But until then, guys, if the market, we are in uncharted territories here because we are at all-time high, so we can't predict where the top is. All we can say is that we are getting quite overbought here. We've seen instances where the market has gone higher than this, so that's not to say that that's it, this is the top. I would expect this gap here to be filled either this week or in the next coming weeks, guys. So this will be the first target. As you can see, guys, we are making higher highs and higher lows, higher highs and higher lows. So until you see a break of structure here, guys, on the week, on the daily, and even on smaller time frames, you can see even at the 4-hour time frame here, this looks very bullish. The 20, the 50 EMA here are acting as strong support. So you want to see a break of structure and those EMAs here, the 20 and the 50, to turn in and act as resistance. Until we see that, guys, we can't fully turn bearish on this. Very importantly. Next, we get the UK 100, and guys, here there's nothing going on here. This chart has literally been consolidating for the last couple of weeks. We've got liquidity resting here and liquidity resting here on at around 7331. So it's just a matter of which liquidity will be taken first. Monitor those two levels, guys, and perhaps once this is taken, if a liquidity area is taken, either the bottom one, look for some sort of reversing pattern to go and target the opposite liquidity. But as of now, guys, not a lot going on there. Next, we get the DAX, and as I've mentioned, guys, the Germany is the first country officially to announce a recession, yet the market is hovering around all all-time highs. Now the market here, guys, has managed, price has managed to hold on. Can you see this 20 EMA here, guys? Support, yet again support here again. When do we turn bearish? Once we break this support here, once we see a candlestick close below this 20 weekly EMA, guys. Very importantly, until we see that, guys, we can't fully turn bearish on this, because the market looks very, very bullish from that perspective there, guys. Now if we do make a new high here, then on negative divergences, then again watch out for that. If we go back here on the daily, again, we've been consolidating here. We have some, let's go on the 8-hour time frame here to see this better. So we've got liquidity resting above this level here, which is at the previous all-time highs, sitting at around 16,427. So watch out for that, guys. I still think, guys, in the next coming weeks, we will take this liquidity here. This is very clean, guys, here sitting at around 15,540. This is very clean, and a target a move here to take that. I wouldn't be surprised to see that, guys. What happens after that, we need to see what price does. Is he going to either reverse and try to go and take that liquidity if he hasn't done so, or is he carrying on lower to come into this daily IC there? As of what happened now, guys, today in the morning, we've seen a price coming. It's literally taken that liquidity, it's been consolidating to go lower. So as long as we don't make a new high here, then I expect price to move in lower, perhaps to this 1 hour IC. This will be a first target that we have for now. But as it stands, yes, we've taken that liquidity. It makes sense for price to move in lower. There's less volume now, guys, because of the US. The US guys are on holiday. The big guys are away anyways. They've taken a long weekend most probably. So I wouldn't think we'll see some major moves until Wednesday, but anything is possible. Next, guys, we get the US 30, guys, and this is very important here. Now the Dow Jones has managed to take the liquidity and then hold the first line of support here, guys. We've talked about this before. We said that if this liquidity is taken, I would expect price to go moving lower into this daily IC, and price has managed to bounce perfectly from here, guys. Now very importantly, if price this structure here, guys, looks very bullish, so even though the fundamentals I've mentioned before looks bearish, the chart, the technicals here look bullish. There's no question about that. And as long as price can remain above this daily IC here, I will expect price to take this liquidity. And then, guys, we have some more liquidity resting all the way up there at 35,536, guys. So don't rule that out. We can certainly see a move higher to take that liquidity, guys. Okay, especially if we see some rotation from tech into the banking sector, then we can certainly see that move happening. If we move in here, guys, where do we turn bearish? Well, we've got that trend line here. We've discussed this before. This hasn't been breached. Okay, so as long as we stay above this, is bullish. When we turn full bearish, when we can see this trend line being broken. Now we do have here on the 8-hour time frame, guys, we do have this liquidity here, very clean liquidity area here that hasn't been taken yet. So I would expect a move down here to take that liquidity. Wouldn't be surprising for sure. If we do get a move higher, we may get that. Okay, we may get back into either negative divergences and overbought there. So watch that out, guys. We are quite, not fully extended yet, but we will be if we keep going higher from here. Next, we get the US 100, the NASDAQ. And guys, the NASDAQ, same as the S&P 500, has managed to hold off and defend the first line of support here at the 20-day EMA. Very importantly here, guys. And it looks like we are now going to take that liquidity resting above the previous yearly high made on the 16th of June. Now we are going higher here, guys. And if we do take out the liquidity, we'll be going higher on negative divergences there. That's not positive. It looks like the breath is coming out. We are going higher on less breadth, less volume. Not everyone is participating in this, which will suggest that a strong move down is coming. Be careful on that, guys. The next levels that we've got, if this liquidity is taken and it keeps going higher, the next level, guys, the next level of liquidity is sitting at around 15,654. This level here on the daily there, guys. We've talked about this before, but we are quite extended here from the mean reversion, from the 20-week EMA. So I think the upside is quite limited, but a move to take the liquidity wouldn't be surprising. So watch that out, guys. Again, this chart looks bullish, guys. Okay, so as long as we are able to defend those EMAs there for now, more upside is certainly on the cards there. Again, here, same as the S&P 500, we have opened with a gap, and as long as we are now creating negative divergences on the 1 hour time frame, as long as price can remain above this gap here, this gap will act as support. If we break this gap, then we'll look at this for resistance, and we certainly can see more downside, guys. Next, we get the VIX. Now, a lot of talk about the VIX being broken, and I mean, I'm starting to believe so as well, because all we've been getting, guys, for the last couple of weeks is market opens with a gap, then goes down to fill the gap. Opens with a gap up, goes down to fill the gap. Gap up, goes down, gap up, goes down. So that's literally what's been happening over the last couple of weeks, which is quite boring to see, to be honest. Now, one thing that we need to watch is, can the market go and close above the 15? Okay, this will be the first level. If VIX can close above 15, then that would give us an indication that this VIX is ready to move in higher, guys. The VIX has been consolidating here over the last couple of weeks, suggesting that a spike, a big move is coming. Now we need something to break for a big move to come. I don't know what that would be, but it suggests that something is about to break, especially that we have high record interest rates, guys, and we've got those recession talks coming in. We've got inflation that is still very, very high and sticky, so something may break soon. Be careful, guys, here. Okay, next we get the DXY here. Now the DXY has managed to not do much, to be honest, over the last couple of weeks. It's been consolidating here. We've had a move higher. We've got two levels that I'm watching. Is this level here at 104.7, this liquidity, and this liquidity here at 105.8. As long as price can remain above this daily IC, then DXY is bullish and can suddenly move in higher. The end target, guys, will be here at 109.5. We discussed this in previous videos, but this is what I'm looking at long term. Next, guys, we get gold, and guys, we've smashed this 100%. We've talked about this, the 20, the 50 EMA acting as resistance, and we said as long as price can stay below those, we certainly see a move lower to this daily IC. Now, guys, we are consolidating within this daily IC. We have the 20, the 50 EMA coming down. If we see a move higher to close above those two EMAs, then we are back to being bullish. As long as price will stay below those two, guys, then I expect us to take that liquidity sitting at around 1887, and then perhaps come into this daily IC here sitting at around 1848. And guys, if that happens, because of a strong dollar, as we expect to have a strong dollar, that can certainly happen, and this way will look to be more bullish longer term. Okay, as it stands, it's just consolidating here in this daily IC. Not a lot for now in here. Next, guys, and lastly, we have Bitcoin here. Now, guys, this has acted as predicted. We've had a reaction out of this daily IC here as we predicted, and we've had actually price coming and taking that liquidity. Now, what do we want to see when we see those kind of moves? We want to see price taking the liquidity and then carry on going higher. Now it's taking the liquidity and it's consolidating, which suggests that a move lower may be coming as long as price can stay within this daily IC. If we see a close above this here, guys, then we can certainly move in higher to the next target sitting at around 38 or so. As long as we are able to hold that, guys, and remember this has been support, resistance, this blue line there. So this level is critical here, guys. It's crucial that it holds for more downside moves. If we able to close above this, then we can certainly move in higher, guys, okay, and even go to target that liquidity sitting at around 48,000. So very exciting here for Bitcoin. We did call in for the top in April. We certainly moved in a bit higher than the top, but let's see if that was indeed, this level here is indeed the top for the year. Very exciting there, guys. If we do get a move lower, then certainly clearing this liquidity wouldn't be out of the question, and this one here as well. That's pretty much it from me, guys. Thank you very much for watching. If you are new to trading and would like to learn more about the strategies that we use, or you are working full-time and perhaps don't have time to trade, definitely check out our ultimate scalping masterclass. Just trying to master trading those 1 minute charts, guys. Very interesting, very profitable strategy there. Thank you very much, guys, and I hope you have a great trading week.